Hello, anyone watching GME? I guess we could address that the video that way. To anyone watching GME, this is probably the chart that you should be paying attention to. It's my 1 hour super trend chart. The script to download my super trend is free. I'll put a link somewhere in the video description. But basically, this is the one I've been tracking since DFV's return. Some people have been asking me, like, hey, I'm still trying to play this. What's the top end? Like, what's going on with all the $20 strike calls and stuff like that. Just to, give a little bit of insight here. Just because a lot of people are piling into something doesn't always mean it's a good idea. Obviously, it's very suspicious when it's bigger money moving the market, and you gotta wonder, well, what are they doing? This isn't what I think is happening, but this is one of the theories that I've been thinking about for a while now, which is, for example, Melvin Capital went under because of their short position, but had they been hedged, they would have been less hurt, I guess you could say, money-wise. They might have even been okay and survived. But a way that they could have hedged their short position was far out leaps, calls, and it's like they could always exercise their calls if they were short squeezed out, right? But that's neither here nor there now because they're no longer around. But we never know if a lot of the call buying is someone hedging, their short position. It could be DFE, it could be the Medallion Fund, it could be anybody at this point. And the reason why I don't think it's wise to figure out, oh, let's play who it is because by the time you find out who it is based off filings or anything like that, so much time will have passed that it's no longer relevant to your price action. So I think right now the best bet is, if you are in GME, is you should be playing technicals. So far it's worked out well for me, so I'm gonna keep doing it myself, right? Back to what I was saying about this chart, but since we're talking technicals, if you notice these magenta zones here, I'll turn the indicators off. If you notice these magenta zones that I had drawn were actually drawn before we bumped up with DFV. They're actually really old supply zones I had drawn out. And if you notice, this is a big one right here, and this one below it. But, just everybody's always like, okay, well, JD's, Johnny's always a bear on GameStop. And it's like, I have been for a while, but it doesn't mean I'm always a bear, right? I have to see value, in the price. So for example, I had this demand zone right here, which was a weekly demand zone from February lows drawn out. And if you go check out my Twitter, like, I did call, like, hey, if you're thinking about going long, then this would be the position to load up on. And I'd like to think that the Medallion Fund did exactly that, because, for example, they loaded up on a fairly large position. For those of you that don't know what I'm talking about, it's Rentech, which is probably one, at least in my opinion, one of the best hedge funds out there as far as returns. They solely trade on like technicals, patterns. They try to find like that needle in the haystack. I'd like to think that's my kind of trading, or at least what I'm trying to emulate. So I'm going to be talking about a few things that were leading into this, that were leading up into this giant move up. Because to be honest, it's, even I myself made the joke, oh, DFV, came and messed up. What I was initially going to do is take a short position, right? But the problem that we run into is it wasn't just DFV. Like, I'm sure, if they bought position and they were using options and things like that, they have quite a bit of money to move around now since their previous position with GME. I'd like to think that they sold previously and now they're making, moves with their new money. But anyway, going not to get off tangent too much, Renaissance Technologies opened up about a $12.5 million position in GME, right? Um, I actually went and confirmed it with on I think it's Whale Wisdom. I checked and somewhere else, but I checked their filings too. I'll put those in the link below as well. You know, they did pretty well for themselves, I'd like to say. And the reason I'm gonna go ahead and call it, as far as they're no longer in the position, is because they trade mechanically. Like, there were too many times, if you go and check interviews and any sort of information that you find about Renaissance Technologies, they're more hands off now as far as their strategies go. Because in the past they had bad results whenever they, I guess you could say, got involved too much, right? Um, their average, if I'm not mistaken, based off what I was doing on the math, is somewhere in the like $12.80 or something. I think it was for Renaissance Technologies. That being said, you know, again, they're very mechanical, and $12.52 actually. They're very mechanical and like strategy based trading. So their positions, their holding time, I guess you could say, is short. On average, a few days, maybe to weeks, right? And the reason why is because they wanted to cap the fund in certain aspects, right? They notice that they do make a certain amount of money before their strategies deteriorate, right? Which is, I mean, it's smart. You always want to know what the weakness is in your strategies and move appropriately according to that. But yeah, they're shorter time frames trading, lasting day trades to a couple weeks. So the reason I bring this up is a lot of people are like, oh my god, you know, they bought in, DFV bought in, XYZ, JK bought in. Everyone's speculating, right? And to be honest, it was just a good value spot. The, like, I guess you could say high 9, low $10 to 13.20s is what I would consider a value range for GME. Like, it was a big demand zone back in February. It's where it bounced, you know, from 40s up to 160s and higher. So I was definitely watching this zone. Separate from that, there was this trend line that I have here, this yellow trend line, which obviously once you break that trend line out, you're going to get more favorable results. Separate from that, you also have, you had a triple inside day right here leading into it. And then obviously his news, you know, so it's all things lined up. I'm not going to go so far as to speculate, but I'd like to think that DFV is similar to Renaissance Technologies in that they can identify certain patterns, certain types of like trading patterns. I'm going to actually identify one for you right now in case, like, for those of you that don't know what these are. I feel like one of the reasons that GME took off big time is it had what's called a high and tight flag, which is this pattern right here. And normally what it is, it's this base with a giant flagpole, and then you get this little like triangle of a pattern. That's the flagpole, right? And the reason that these are good returns is because, well, I mean, I've played them before. For example, GME had one over here leading into the squeeze, which was caused obviously by separate issues. And then there was another one here and another one here. I actually managed to clip the top in March when people called this the flash crash, right? But I used the same type of modeling techniques to machine learning, right, to try to predict the top this time, and I actually nailed it pretty good, which is I called $65 the night before. Obviously, it did go higher in extended hours trading. Obviously, not everyone can trade up here in the 80s, depending on what broker you're on and if you were awake and all that. But I managed to cap at least the top of the intraday, the regular market hours trading. And yeah, I mean, I'm gonna just go ahead and openly say it for those of you that don't know. I short GME a lot, you know, so that was a short from there down. Other than that, the one thing I will say is there's not as much energy in the stock as there was for January. I would compare this more to the February bump. You can even notice in like volume and stuff, it's the pattern is more matching this and less this. Even on my machine learning simulations and whatnot, everything seems to be matching March 2021 and even June activity more than it is January, February. That being said, the reason I'm even doing this video is because people are asking me, well, what do you think GME is going to do, right? And to a certain degree, I was right here on my bearish stance until, again, this happened with DFV and whatnot. But now, my bearish stance was fine here from the 65 down. And currently, I'm going to turn this back on. The most important charts to me right now are the 2 hour on my super trend, which again, I'll put the link below so that you guys can download the script or whatever. The 2 hour seems to be what looks like, I guess you could call it support. And I'm going to turn the drawings off just so we can see the pattern, the super trend script. So if you notice, it broke out, riding the EMA cloud, got this bump up, coming back down. And if you notice, I do have it set for 2 hours with regular trading hours. I don't have aftermarket and pre-market on here. And the reason why is because it can throw some indicators and patterns and things like that off. So, and obviously it's lower liquidity. I'm not saying the data is not important. I'm just saying it's way lower liquidity. So right now, to me, the way I'm viewing it is the 2 hour chart is the support. So if you notice, it's riding this 2 hour support trend line. So it took the ride up, came back down, and this is what's keeping it afloat, if you will, right now. The 1 hour is the one that needs to improve in order for it to be even more bullish, which, I mean, it's trying. It had this bump up above the super trend and then it got swished back down. But the reasoning for that is because we're in a supply zone. So we have issues when you hit supply zones because it's a previous space where people sold, right? So if you notice, this one comes from here, which, if I'm not mistaken, I think it's a daily, or I think I grabbed daily supply zones for these. But what I'm trying to get at is when you zoom in a little bit. So I'm going to do the 1 hour, but I'm going to turn the extended trading hours on. And if you notice, each time it had a supply zone, so these were painted before DFE came back, these supply zones of mine. So if you notice, on the way back down, this was a really nasty supply zone because the wick tried to get back up in there again. There was a liquidity search of sorts, but it got slammed back down. And then this supply zone, once it lost here with this big wick on the 1 hour, it never was able to come back up. And then the next one, which is right here, and once it slides through the supply zone, it just got sold off. That being said, GME currently, is in between two supply zones. Now, I guess what I want to bring up is, if you notice, it's getting squished, and we can even look at it on a closer time scale. Notice it barely got in the supply zone for, 45 minutes roughly, and then it got slapped down. Now, as far as to know where GME is gonna quote unquote go, right? So if we have this right here, let me see here. Yeah, we got the current time. So we have this, right, which is currently our 2 hour, and this is our 1 hour. And like I said, here the issue is we got to turn the regular trading hours on. And if you notice, this is your resistance. And the reason you see these three little dots up here is because I have the Watson envelope on. And if you notice, it's kind of telling you it's the top end of that trading range right now. So it doesn't help that we're in this trading range. We're between two supply zones. The only thing that's favorable for GME right now is, again, the flag symbol, the high and tight flag, which this is your standard pattern for the flag right now, where it's decreasing in volume and then it starts picking up again. And then again, you'd be able to see the flag a little bit more defined on maybe like a 2 hour, I think. Normally it's a little bit more well defined, but obviously GME happened a lot more during these extended hours. So somewhere around here, right? Now, that being said, I do see the calls, like they got opened up to, high strikes up to in the hundreds. I myself even, I'm going to zoom out and I'm going to show you guys so you guys can see I'm not a perma bear always, but my machine learning actually spit out 92.27 as the top end had this continued. had DFV's return continued. And the reason I mention that is because dumping shares into the market, I'm sorry, but that's not going to help any quote unquote squeeze or BOAS. You guys, whoever's in that boat of GME elitists and they're here for MOAS and all that stuff, like they can just close the video out right now because I don't believe in MOAS. I don't think it's going to come. You'll get these short squeezes, right? Or I guess some people call them gamma ramps. But you have to be very careful when you're watching these because a lot of it has issues, and I'll show you why. This is a very sparse gamma ramp, if that's what you're going to call it. Normally when it's a full gamma ramp, you'll see green lit up, like from all the strikes from like 20 to 40, 20 to 60, something like that. And the problem that we're running into here is everybody sees, okay, well, there's some whale buying, 20 strikes, then I'll jump into 20 strikes, and everyone else jumps into 20 strikes, and it's like, but no one's realizing that at the end of the day, it's kind of like pinning the price a little bit to hover towards the 20 strikes, unless people are more actively buying shares, and then obviously offsetting with higher strikes, right? If you notice, that's why the GEX is stuck at 20 on the negative GEX, right? And the thing that we're coming into is they're too sparse even on when they come in on the chain. For example, here's the 20, right? Obviously it's climbing, right? And again, I'll admit there's big money here. We don't know if they're offsetting a short position. We don't know if they're trying to get the second pop. And what I mean by that is GME is very notorious, along with other meme stocks, of after an initial, squeeze event, it'll have another, like aftershocks. That's why I've famously referred to GME as the ball bouncing down the steps, right? It'll, get these pops up and down, but it'll keep bouncing down until we finally reach, this was the bottom of the steps. So then we got this giant pop, right? The problem is, I don't know if there's going to be enough energy to get it even high as we previously had at the 64 level. It's looking very difficult from where we stand right now. Just to give you an idea, for example, this is a pretty neat tool that TradingView has, the matrix. For example, the matrix said to go long here, right? And this is back on April 22nd. And it popped up here, and now if you notice, the matrix line is once it crosses up the red and the green, that's very bullish. But now it fell through the green, it's about to fall through the red. It might catch at the red, but doubtful depending on the price action as far as pure buying. The other problem is you have put contracts against them, and these are actually spread out correctly in between most of the strike contracts, at least in my opinion. So you might get some movement upward, but as of the current time, I don't really see it getting up to 65 and higher where I'm standing right now. I won't deny that on the daily and on the weekly, and I believe even on the monthly, there's still a flag, right? So this is the flagpole right here, and that formation can still pan out. However, the longer it stretches to the right, so the more trading days we have, or if it drops below, I think the last time I did some numbers, it was like $10.80, $10, like call it $11. If it drops below $11, or if it trades too much sideways for the next few days, then it's going to dissipate. Like the flag pattern is invalidated, and then therefore you don't have that. The reason I bring this up a lot is because older hedge funds, a lot of mechanical, algorithmic, quantitative type of hedge funds use patterns like these to try and trade, whether it be like RSI or MACD or a combination of those two, plus volume, plus supply, demand, whatever it may be. But usually it's some variation of all of these. That being said, I'd basically say if it drops below the trend line again, and it loses this supply zone down here, then basically I'd call the flag off. Like I wouldn't try to chase that action anymore. Even right now, I wouldn't be buying in this late because most of the time I play options, and the IV's really ridiculous right now. I just wanted to share some other things which are here's support resistance for the 4-hour GME 4-hour. So if you notice, we first got to break 50 bucks, but right now, even before that, you know, it's stuck in this wide band, which if you notice here, same thing. So these are volumes, right, of trades. And right now where it's currently caught at, sure, it can get up to like, let's say 30. But then moving up past 30 is a little bit of a feat without absent like other conditions, I guess you could say. Here's some information as far as the flow. You know, you can pause the video, slow it down. Again, I do see, you know, there's quite a bit of contracts for 20 strike, especially on 621, right? And, you know, while I understand that, again, a lot of you need to understand it really depends on who's buying it, when they're going to sell it, because they might not hold it to expiry. Maybe they're big money and they can exercise. Things like that. Like it's not just one strategy that you, or like a one level, one dimension that you have to be looking at it. Personally, I would realize, you know, there's a lot of both calls and puts. Aside from that, here's the 621, which again, the 20 calls are leading. There is a little bit of interest in the 30 strike, but not as much. This is the aggregate. And then the famous dark pools that everyone cries about, you know, here's the problem that we run into is if you notice most of the selling was done up here at the peaks. So that, you know, who trades the dark pool? Well, retail usually doesn't. So that's why it leads me to believe anybody that had a long position that was making a lot of money, Jane Street, Citadel, and again, this isn't shorting. I'm talking about they might have had a long position and they were able to liquidate in here with a dark pool sale or Renaissance Technologies, and it's like, one, you no longer have those people involved in the trade, so therefore the volume will start waning. Two, you don't have these large institutions or hedge funds long anymore, right? And three, you need to worry about it because they're over here trading somewhere you can't. So it's like, this is where I say, take your profit. You know, if you made green, if you did really well on this pop to GME, I myself did okay, but if you're doing really well, like for example, you were one of those people, and this is not financial advice, it's just, it seems like common sense to me. But if you bought back here and you were still in the red and this made you green, that might have been a time to readjust your thinking and maybe sell. The reason I say why is because in my argument to most GME elitists is, why would I buy up here, up here, up here, up here, up here, up here? All these buys, you know, as it's going down, and people can talk to me about dollar cost average all they want. But then let's say we finally get down here to this demand zone I've been watching, and I just come in and buy at, you know, $10. Meanwhile, your cost average is, I don't know, 20 plus because you've been buying the dip every single time. Be a smarter trader. You know, work smarter, not harder. Just a little bit more. Like I said, this is just to give an idea as to why I'm comparing it to the previous volume that we had for GME. And I want you guys, so this looks impressive, right? Volume wise for the past few months. Right, and you know, somebody over here started buying in like end of December down. That's perfect. But again, it looks impressive, I guess you could say. And people love OBV. You know, let's bring up the famous OBV. But the problem is when you zoom out, this OBV, which is the default, which is a cumulative indicator, which that's not always the greatest thing because they can have flaws. They even say so in the reference text where OBV was made and all the formulas and whatnot. It says if you have a big spike like this, it'll throw it off. So that's why I prefer this one, which is an oscillator. But if you notice, this spike is nowhere near as big as these. In fact, the closest it gets to is maybe this one right here in March. And it exceeds it by a little bit. So that's just to put things into perspective. I'm not trying to scare anyone, or I don't even know what your positions are. Currently, I have some end of the month puts that are probably going to be crisp by the end of the month. I don't mind. I did fine on this bump up with shares alone, so it's fine. But like I said, I don't think this is exactly a bullish scenario, if you ask me. Everybody's gonna say, "Oh no, Dad, this and that, fundamentals." Yeah, but fundamentals don't, warrant it 65, 48, 36 price action. Fundamentals puts it at, between $8 and $16, depending on who you ask. So definitely be safe out there. As far as, again, if it does start squeezing, I haven't been watching it myself as much as I should be, but if it for whatever reason does start squeezing, then here's a number to keep an eye on in 92.27, but that'd be only if we break above 64, or well, 65 again. But again, I don't see it. If you guys, happen to get that, that's cool, right? I'm happy for you. But don't become a bag holder because someone else promised you, phone numbers and thousands of dollars per share. It's most of it's bullshit. We've been at it for 3.5 years, hasn't come through yet, and it's not going to. And for anybody saying, "Oh, but look, this event right here proved that we were right, or that we're chasing, we're not chasing our tails, and there's a conspiracy." No, this is just a lot of smart money that got in. They piled in at the right time at a good price, and I mean that's basically where we're at. Let me see real quick. I'm just curious what the smart money concepts looks like on daily, and I will take my drawings off. Yeah, so if you notice, I'm assuming, I don't have it right now, but I'm assuming that demand zone, when I was first looking at it, I'd have to go check my screenshots I saved, but I'm assuming down here there was a discount zone. At some point it was green and it was a discount zone. But if you notice now, we have these two, change of characters and a weak high. So I would not be, gambling on this. The current top end, in my opinion, is somewhere in the 28 to 32 area. Give it some wiggle room. Again, I'll share the script to my indicator, but I would not be pushing the limit past that. That's why it's reacting to this demand or supply zone over here. It's getting sold off, if you notice, So there's the 1 hour, the 2 hour, which is what I consider support, and the 1 hour, which is what I consider currently the resistance. It'd have to break above the super trend and above the supply zone. It may have moments where it does what I call a fake out, which I don't know if I have an example of it right now. Here's a fake out. So it broke above and then it still broke down. So it may have a fake out, which I'm kind of expecting it over here. We'll see what happens. It might have a fake out into the top end of the supply zone and then get sold off. The reason I bring that up is because the same thing happened with the demand zone here. It had a fake out. Some people, I'll zoom out to the daily, sorry. So if you notice, some people got faked out here. These are the first wave of buyers in the demand zone, which they got a good move up, but then got slapped back down. And then the real value buyers were people down here because they obviously, got it for $2 or $2 plus cheaper. So that's what I'm talking about with the supply zone over there. Right now it's testing the, doing this where it's testing the supply zone. Just think of it inverse. So it tested the supply zone here by going into the red, right? So it'll go back up, and this time it might dig higher up into the top end of the supply zone and then get sold off, which is what I'd keep an eye out for. If it does that, being pinned at $20 is not going to help the options. Like, it's cool and all that there's a bunch of $20 strikes, but it's not going to help you if that's all there is. There has to be more options stacked higher, and there has to actually be organic buying, which I'm not going to say there isn't going to be. For all I know, DFE comes back again tomorrow and starts tweeting for another 2 weeks or some crap. I don't know. I honestly don't think it's going to get as high as it did in January, though. I don't think MOAS is here either. Congrats to those that got out over here in green or made money or anything like that. Sorry to those of you that are bag holders. Be careful who you listen to out there, because, well, there's a lot of grifters and people that want your clicks, your likes, your views, your money, whatever it may be. Trade smart, you know, get data. For example, don't be, oh no, I can't see the dark pools. No, go, you don't have to even buy my provider. Go get a different provider, and then learn what dark pools are and how to track them and stuff. Here's a 5-minute dark pool, for example, that shows you kind of a range we're in, which is between like 22 and 27, which is what I said, roughly like 28 to 32 is going to be the top end right now. If it obviously breaks up, that's cool, but there's another little area up here that's a gap fill around the 39 area. We don't know what might happen once that gap is filled. It might get sold off again. These are pretty weak candles over here. But definitely good luck to all of you out there. Hope I answered your questions. Shout out to Dave in the Discord. And yeah, I'll be making the Discord link public soon again. I've been touching up permissions and modifying some of the bots and stuff like that. So that'll be open to the public again soon. So have a good one. Trade safe.